As I began to dive into the world of digital currencies, I quickly realized that there's a significant shift happening right under our noses. It's like the entire financial landscape is changing, and it's all because of the growing need to find alternatives to the US dollar. With all the economic policies and sanctions we're seeing, countries are actively seeking out new ways to handle their money. And this is where digital currencies like Bitcoin and stablecoins are stepping in. Imagine this. You're a country that's been relying on the US dollar for decades, but suddenly, due to political tension, you're hit with sanctions. This means that your access to international trade and the global financial system is restricted. It's like having your hands tied behind your back in a boxing match. So, what do? You start looking for alternatives, and one of the most promising alternatives right now is digital currency. Now, Bitcoin is one of the most well-known digital currencies, but there's also this other player in the game called stablecoins. Unlike Bitcoin, which can have crazy fluctuations in value, stablecoins are pegged to a fiat currency, like the dollar, which gives them a more consistent value. It's like having a digital version of the dollar that you can use without needing an actual bank account. This makes stablecoins particularly attractive for countries looking for a way to bypass traditional financial systems. But here's the kicker. While everyone's busy talking about how these digital currencies could dethrone the dollar, the reality is that they might actually be reinforcing its power. A lot of these stablecoins are pegged to the US dollar, which means that even as countries move away from using physical dollars, they're still tied to the dollar digitally. It's almost ironic, right? Countries are trying to break free from the US financial system, yet they end up finding themselves even more entangled with it. And then there's Bitcoin. It's seen as this ultimate tool of financial freedom, but at the same time, it's also being integrated into the existing financial structure. More and more people are holding Bitcoin not as a currency to buy and sell goods, but as an asset to invest in. It's like gold. It's something that holds value over time. And institutions are getting in on it too. They're creating Bitcoin ETFs, which are basically ways for everyday people to invest in Bitcoin without actually owning any. So, while Bitcoin might be designed to operate outside of traditional finance, it's becoming more and more intertwined with it. In the end, it feels like we're on the verge of a big transformation. Digital currencies are here to stay, and they're reshaping the global economy in ways we're only beginning to understand. Whether they'll completely replace the dollar or just work alongside it is still up in the air. But one thing's for sure. The old ways of handling money are evolving, and digital currencies are leading the charge. As I continued to explore the world of digital currencies, I realized something fascinating. Despite all the talk about the decline of the US dollar, digital currencies like Bitcoin and stablecoins are actually helping to reinforce the dollar's dominance on a global scale. It's a twist I hadn't anticipated, but the more I dug in, the clearer it became. Many people believe that as digital currencies become more popular, they'll weaken the power of the dollar. And sure, it might seem that way on the surface. But when you look at stablecoins, for example, it becomes apparent that they're deeply tied to the dollar. Most stablecoins, the big ones that are gaining traction, are actually pegged to the US dollar. This means their value is directly linked to the dollar itself, keeping them stable. So, while countries might be moving away from using physical dollars, they're still tied to it digitally. In other words, they're just swapping out one version of the dollar for another. It's like the dollar is hiding in plain sight within the digital currency world, cleverly maintaining its grip on global finance. These stablecoins make it easier for people and countries to engage in transactions without using traditional banking systems. But because they're pegged to the dollar, they still uphold its value. So, Even though digital currencies might seem like a rebellious alternative to fiat currency, they're inadvertently propping up the dollar's influence. And then there's Bitcoin. It's often viewed as the antithesis of the dollar, a symbol of freedom and decentralization. But Bitcoin, too, plays into this dynamic. More and more, Bitcoin is being seen as a store of value, similar to digital gold. It's something people invest in, rather than use for everyday purchases. And interestingly, Bitcoin's most liquid trading pair is often with the US dollar. So even though people might be investing in Bitcoin to escape traditional finance, they're still engaging with the dollar in the process. This integration into digital finance is allowing the dollar to maintain and even expand its supremacy. Institutions like BlackRock and Fidelity are creating Bitcoin ETFs, making it easier for average people to invest in Bitcoin within the framework of traditional finance. These ETFs draw more attention and more investment towards Bitcoin, but they also strengthen the dollar's role in global finance. After all, the most popular way to buy and sell Bitcoin remains through dollar-pegged transactions. So while it may seem that the rise of digital currencies is threatening the dollar, they're actually giving it a new digital layer of dominance. The world might be moving away from physical cash, but the dollar has adapted. It's not going away, it's just evolving to fit into this new digital reality. This realization makes me wonder just how deeply the dollar is ingrained in our financial systems. It's like a chameleon, changing with the times, always finding a way to stay relevant. And digital currencies are simply its latest disguise. As I dug deeper into the world of Bitcoin, I stumbled upon something that truly surprised me. BlackRock, one of the largest asset management firms in the world, has started to heavily invest in Bitcoin. Now, BlackRock isn't just any company, it's the kind of firm that manages trillions of dollars. For them to be interested in Bitcoin, that's a big deal. It's like seeing the most traditional financial giants suddenly step into a world that was once considered the Wild West of finance. But what's even more interesting is how they're approaching Bitcoin. BlackRock isn't just buying it up quietly. They're going all in on Bitcoin ETFs, exchange-traded funds. These ETFs allow people to invest in Bitcoin without having to actually buy and store it themselves. Instead, they buy shares in the ETF, which is backed by real Bitcoin held by BlackRock. This makes Bitcoin more accessible to everyday investors, who might find the idea of setting up a digital wallet and dealing with the complexities of buying Bitcoin a little intimidating. To me, this move shows that BlackRock and other major institutions aren't treating Bitcoin like some fringe currency. They see it as a serious financial asset, a kind of digital gold. They're not using it to buy coffee or pay for services. Instead, they're using it as a way to store value, much like you would with gold or other traditional investments. This is a major shift from the early days when Bitcoin was seen as a tool for anonymous online transactions. Now it's being folded into mainstream finance as a legitimate asset class. What's fascinating about this is the effect it has on how people view Bitcoin. When big players like BlackRock get involved, it sends a signal to everyone else. Bitcoin isn't just a speculative investment for tech-savvy individuals. It's something that traditional finance is taking seriously. This gives Bitcoin a level of credibility that it didn't have before. Suddenly, people who were skeptical might be rethinking their stance. If BlackRock is backing Bitcoin, it's hard to argue that it's just a passing fad. And let's not forget the ripple effect this creates. When a firm as influential as BlackRock starts promoting Bitcoin ETFs, it opens the door for other institutions to follow suit. We've already seen companies like Fidelity and even some big banks start to explore Bitcoin as part of their investment portfolios. It's as if BlackRock is leading the way, paving a path for Bitcoin to be recognized and accepted by the broader financial industry. They're setting a precedent, and it's changing the game entirely. So here we are, witnessing a transformation. Bitcoin, once thought to be an outsider, is now being embraced by the financial giants. It's no longer just about tech enthusiasts or those looking to challenge the status quo. Now, it's about big money, institutional backing, and serious investment strategies. Bitcoin has become a part of the financial establishment, and with companies like BlackRock at the helm, it's only going to continue growing as an asset class. The question now isn't whether Bitcoin will survive, but just how far it will go as a staple in global finance. As I started to dive deeper into the history and origins of Bitcoin, I came across a fascinating theory that made me pause. It turns out there are people who believe that Bitcoin's creation wasn't just the work of an anonymous individual or group known as Satoshi Nakamoto. Some, like Raoul, even suggest that Bitcoin's rise might actually be linked to the actions of governments, specifically the intelligence agencies of the United States and the United Kingdom. At first, it sounds like something out of a thriller novel. I mean, the idea that a currency built on principles of decentralization and freedom from government control might have actually been developed by government agencies is almost unbelievable. But then I started to think about it a little more, and I realized that there's a certain logic to it. The US and the UK are home to some of the most advanced cryptography and intelligence agencies in the world. They've been at the forefront of technology for decades, and they're constantly exploring new ways to exert influence and maintain security. Could it be possible that they saw the potential in digital currency long before the rest of us did? One thing that sticks out is the timing. Bitcoin was introduced in 2009, right after the global financial crisis. This was a time when trust in traditional banking systems was at an all-time low. People were angry, looking for alternatives, and Bitcoin seemed to arrive just in time to offer that alternative. It's almost too perfect, like the solution was ready before most of us even knew there was a problem. That alone makes you wonder if there was more to its origins than meets the eye. Then there's the question of Bitcoin's structure. For something that's supposed to be free from centralized control, it operates on a level of transparency that is, in a way, paradoxical. Every Bitcoin transaction is recorded on a public ledger, the blockchain. While this offers a level of security and immutability, it also means that every transaction is visible. And with the right tools, it's possible to trace transactions back to individuals. This isn't exactly the kind of anonymity you'd expect if the purpose was to create a truly private and untraceable currency. It's almost as if it was designed with transparency in mind, which could be very useful for governments who want to monitor financial transactions on a global scale. Some even suggest that the intelligence agencies might have been testing the waters with Bitcoin, using it as a way to observe how people use digital currency. It's like an experiment in how decentralized finance would work in the real world, and the information gathered could potentially be used to shape the future of digital finance. Think about it. With all the data from Bitcoin transactions, governments could learn a lot about spending habits, the movement of money, and the global appetite for digital currencies. Of course, there's no solid proof tying governments directly to the creation of Bitcoin. But these suspicions raise interesting questions about the role governments might play in the evolution of digital currencies. Whether or not they were involved from the beginning, it's clear that they're paying attention now. And as more countries explore the idea of their own central bank digital currencies, you can't help but wonder if Bitcoin was just the beginning of a much larger strategy. In the end, it's one of those mysteries that might never be fully solved. But it's fascinating to think about the possibility that Bitcoin's rise was more orchestrated than we realize. If governments did play a role, then the entire narrative around Bitcoin as a tool of financial freedom could take on a whole new meaning. Whether we're talking about accidental involvement or a deliberate plan, the thought that Bitcoin might be connected to something much bigger is enough to make anyone rethink their view on the digital currency revolution. When I first got into Bitcoin, I was drawn by this idea that it was a way to escape the traditional financial system. It seemed like the ultimate way to avoid banks, sidestep governments, and finally have control over my own money. But as I looked closer, I began to see that things weren't as straightforward as they seemed. For all its talk of freedom and decentralization, Bitcoin has some features that actually reinforce the very systems it claims to bypass. First, there's the issue of transparency. Every Bitcoin transaction is recorded on the blockchain, which is essentially a public ledger. This means that anyone, anywhere, can see every transaction that's ever been made. Of course, these transactions don't include names or other obvious identifiers, but they do link to wallet addresses. And here's the thing. With the right tools and some detective work, it's often possible to trace these wallet addresses back to real people. So, while it might seem like Bitcoin offers privacy, it's more accurate to say it offers pseudonymity. You're not completely anonymous, you just have a different name. This kind of transparency might not be what you're looking for if you're trying to avoid prying eyes. For example, if someone knows your wallet address, they can see every transaction you've ever made with it. There's no way to hide that information. It's like putting all your financial activity on a bulletin board for anyone to see. In fact, this visibility can even make it easier for governments to track down people and keep tabs on how money is moving around. And then there's the role of Bitcoin ETFs and stablecoins. I initially thought these were new ways to break free from the old financial systems, but they're actually more intertwined with traditional finance than I realized. Take ETFs, for example. These are products that allow people to invest in Bitcoin through the stock market. They don't have to buy actual Bitcoin or deal with wallets. They just buy shares in a fund that holds Bitcoin for them. In a way, it's making Bitcoin more accessible, but it's also pulling it into the world of traditional finance. It's not exactly the revolution I'd pictured. It's more like Bitcoin is being rebranded as just another asset you can trade, much like stocks or bonds. Stablecoins, too, play into this dynamic. They're digital currencies, but many of them are pegged to the US dollar or other fiat currencies. This means that their value is tied to traditional money, and they often rely on banks and other financial institutions to maintain this peg. So while they might offer some flexibility in transactions, they're still very much part of the existing financial system. Rather than offering a true alternative, they're actually reinforcing the dollar's dominance by making it easy to transact digitally while staying tethered to its value. In the end, what I thought was a path to financial freedom started to look more like a detour. Bitcoin and other digital currencies might offer some new tools, but they aren't as removed from traditional finance as I'd hoped. In fact, they seem to be working hand in hand with it in many ways. I can see now that while these digital assets are powerful, they're also part of a larger financial puzzle that's still being pieced together by banks, governments, and big institutions. Far from escaping the system, Bitcoin may actually be reshaping it, just not in the way I had originally imagined.